everyone, and welcome into crushthestreet.com. And my name is Kenneth Amaduri. And today we're going to have a technology revolution discussion, but really in an area where we as investors can make money. And it's basically sidestepping the banking industry with crowdfunding. And this is just popping up everywhere. And, we talk about the banking industry and, there's a lot of problems that exist within that space. And this is a free market solution to the established brick and mortar establishment places, conventional ways of thinking. And I have on the line today Amy Kirsch. She's got years of experience in the financial services sector, and she's been the head of investor relations for PeerRealty, a Chicago real estate crowdfunding platform. And now she's with Realty Shares. And you know what? This is going to be a great discussion today because we're going to discuss crowdfunding and the trend, where this is going, and opportunities for us as investors to make money. So, Amy, thanks for coming on the line with me today.
Thank you so much for having me.
Well, I'd like to get to know a little more about your company. I've gotten to, I've invested personally in some of these peer-to-peer lending companies, and I find it very fascinating. The returns are very high for investors, and really it's a sidestep of conventional banking. So if you would, let us know a little bit about what you guys are doing and where this is headed.
Absolutely. Realty Shares is a marketplace platform that connects real estate investors like yourself, with opportunities all over the country in both commercial and residential, debt and equity, and a wide variety of asset classes. And what's really interesting about what we're able to do is we're able to have minimums that are much lower than you traditionally see in real estate investing. In certain circumstances, you can invest in as little as $2,000 into an offering. And like you said, you can have some of those benefits that come along with real estate investing, which can include higher returns potentially, and an alternative to traditional investments.
Okay, so this is growing huge and fast. Tell us a little bit more about, what sort of momentum is picking up, and what does the future look like for this sort of opportunity for investors and just the way people borrow money nowadays?
Sure. Well, as a general marketplace, residential real estate alone is a $29 trillion market. Just to give you some ideas of where we have been, in last year, we raised about $240 million on the Realty Shares platform from investors, and we only see that number growing from here. Through January of this year, we've actually originated more than 300 million real estate projects across 550 deals. So we've seen tremendous growth through the platform, both on the investor side and with sponsors coming in to raise financing from us as well, who are looking for options outside of the traditional lenders or traditional equity financing that they've used in the past.
So this is more than just your average investor, like myself, interested in looking for a good return. I mean, we're seeing investment funds and just large institutional investors getting into this space. Are you seeing this on your end? And maybe you can give us a little more insight on that.
Yes, absolutely. So more for debt right now, but we're certainly speaking with institutions. But we've seen that across the board, people are looking for alternative ways to put capital to work, and Realty Shares is a great avenue for that, simply because of the volume we're able to originate and present to institutional and individual investors alike. So absolutely, we have inbound requests from basically every kind of investor you can imagine.
Sure. Okay, Amy, I have to ask you this because the returns for a lot of these opportunities, in this crowdfunding space, peer-to-peer lending, in many cases is very high, and it's impressive. And I'm wondering if just a tremendous amount of money is entering this sector, and is it at risk of a bubble? because of
Yes.
and I mean, because where else are you going to, in some instances, people are getting 10, 11, 12%, and they look around, they're like, where else am I going to get that kind of return? And they're just throwing all this money into this space. Is there a risk of some sort of bubble? And or maybe specifically to you guys, what do you guys do to protect from that?
Yes, it's an excellent question. With these returns come added risk. So I like to, when I'm speaking to investors or anyone on my team is speaking to investors, that's where we would start. It's an illiquidity premium because of these deals are longer term. There is no secondary marketplace. So in turn, you're going to have higher returns attached to the investments. So if you understand that risk return reward, then it tends to make more sense in terms of maybe there's not a bubble per se, but that you're going to have to give up some of the benefits of a traditional investment in order to invest with us. And so you have this opportunity to receive a higher return. So
Okay.
I wouldn't perceive it to be a bubble per se, but what I would say is as interest rates may rise and we might see some change in those returns, and investors have to have the ability to stay with these investments over a longer duration of time. So does that make sense for their overall investment picture? Is that something they're comfortable with? Those are really important questions that we're going to ask investors when they're coming to us to invest with us.
Well, that's an interesting point you bring up. So if interest rates do go up, should investors expect to make even higher returns, or is that a potential risk?
Well, it tends to bring down the valuations of real estate investments. So it could perhaps delay exits on some of our properties. I would say that most of the investments, especially on the commercial side and the residential, and in some cases the residential debt side, we're looking at value add opportunities. So for investors, that means that we're taking let's say a multifamily apartment building in a secondary marketplace that needs a lot of work. So they're banking on not just appreciation from the overall market, but on this specific property increasing in value due to some of the work that they're going to put into it. So not necessarily, but it really will depend on the individual investments and their business plan. And I'll say too, you had asked a bit earlier about what we do to protect investors. Well, we're doing a lot actually, and that's one of the major benefits that I see of using Realty Shares versus going out and doing real estate investing on your own, is that we have a team here of over 100 people who are there with you from the beginning to the end of your investment, which means we're doing the due diligence on the properties. We have an asset management team that's looking after your investment once you place dollars with us, and then ultimately seeing it through to exit. So we have legal in-house and finance and all these other areas that it's impossible to replicate on your own.
Sure. No, that makes a lot of sense. And maybe you would give us some of the criteria that you guys go into some of these properties with. Is there a certain equity expectation that you would lend to, and just certain safeguards that makes the investment that much safer?
Yes. So to make it so we more fully understand the investment, we have a couple baseline criteria that need to be met. One is we ask for a submission of a track record from the sponsor to see what their previous experience has been. We run a credit check and a background check on the sponsor as well to make sure that there are no red flags in that department. If they meet those general criteria, then we move on to further due diligence. And from there, we would look at third-party research about the area where the property is located and understand what the business plan is, like I mentioned earlier, and underwrite the deal ourselves, making sure that the financial assumptions that are in place make sense for the returns that are being projected. So that's all happening on the front end. And then ultimately we're making pricing decisions, so negotiating with the sponsor and pricing that would make sense for our investors as well. So they're earning what we believe to be the proper return based on the risk that they're taking on.
No, that's really cool. So let's talk about opportunity for different investors. I see, is it possible for people to retire and to invest in some sort of crowdfunding, a peer-to-peer account such as what you guys are offering?
Do you mean using retirement funds or living off the proceeds?
Well, I know you're going with this, and when you use it, you're going to be taxed on it. But So can someone invest, for instance, through their IRA using your platform?
Absolutely. And we have a lot of investors who use us for, it's very difficult to find real estate opportunities to invest using your retirement account. And we work closely with a couple of providers, and then you're able to reallocate those assets from stocks and bonds into direct real estate opportunities.
All right. Well, let's talk about then how real estate investing compares to the stock market, and what are the advantages?
The advantages are you're going to be able to potentially earn higher returns because of the nature of the investment itself and because you don't have that liquidity. If you're investing in equity, there can be some tax benefits that you wouldn't receive from traditional investments, where you can write off depreciation or other losses against your investment that can go against your traditional investment gains. Also, the way that the investment itself is taxed can be as long-term gains rather than as current income.
Okay.
So there's a ton of different benefits. It's also a diversification play where you're going to see a lot of correlation between asset classes, between stocks and bonds and REITs, that they're generally moving in the same direction, and real estate can be a hedge against that. So that's where I really see it playing into an overall portfolio picture.
Okay, and just to be clear, investing in these solutions here and realty shares, investors can actually take advantage of something like depreciation when they don't actually own the home?
If the investment is an equity investment, then it looks like an ownership stake in the property. So yes, you would have those pass-through benefits of depreciation.
Oh, wow. Well, that's really cool. I didn't even consider that as a benefit in investing in something like this. So, okay. Well, Amy, what else is there to know about the opportunities in investing in realty shares? And maybe you want to share a little bit about why someone would want to borrow through you guys, even though I'm not as much of a fan of that side of the coin as I am investing with you guys.
Sure. Well, I'll talk first about the benefits from an investment perspective, which would be traditional real estate investing, even if you do have some access, is in your own backyard with people that you know. Realty shares breaks that wide open. You're going to have opportunities. We've had funded deals in 35 different states, so you can invest across the country in different asset classes, hotels, multifamily, retail. So even just diversifying into real estate is one aspect, and then even further diversifying your real estate holdings. It's really difficult to do that on your own. So I think that's the major benefit that I see. And then having this team of experts behind you who are helping you to select your underlying investments. Mm-hmm. On the borrowing side, there's two real benefits. One is speed, and the other is access to quick capital from. Well, so I guess that would be speed from on the side of financing. And so we can give you a decision and get you funded within 10 days. And then we have the ability to repeat that process. So it's volume and speed are both very important from a borrower's perspective, and we're able to allocate funds pretty quickly if we make a decision that we're going to fund your investment.
Amy, I want to go back to the investing real quick, and something that I wanted to ask you about, and that is how is the borrower protected when someone doesn't pay? What is the process you guys go through to protect their invested capital?
Yes. So it's a wonderful question and something that comes up often. So, after you've made your investment, what are we doing for your benefit to help you understand where things are, give you updates if a payment doesn't come in? We have an asset management team here and a servicing team that monitors payments and updates on a monthly or quarterly basis, depending on the underlying investment. And if there is a delinquency in payment, and it's a debt investment, for example, after 30 days, we're going to send a demand letter from our team here, and then we would engage a third party to begin the foreclosure procedure if it merits that. We also have within our agreements with borrowers that we start charging default interest, and then we have these foreclosure provisions as well if they don't pay within 60 days. So we're quick to move if a borrower is not paying, and we have it within our legal rights to, like I said, demand to charge default interest and then ultimately to foreclose on the property. On the equity side, it can be a little more of a case by case basis, because there are different remedies that we have in order to correct the situation. We can take over management. I mean, it really depends on the underlying property and what the agreement is with them. But I think what's most important to understand is that we have an asset management and servicing team here who are there to oversee should something to default, to interact with the sponsor. We can bring in legal, we can bring in the teams necessary to correct the situation.
Amy, now a lot of people are worried about investing in the real estate market now. We're back to 2006 highs in a lot of ways. And I just want to kind of get your opinion on where we are with the market in general. And does it bother you at all? And I hear a lot of people say that despite the amount of debt and the leverage situation that we've seen and the low interest rates that we have, there's a shortage in the real estate market. There's a lot more people on this earth than there was in 2006, and we didn't have a lot of housing that was built between whatever it was, 2008 and maybe 2012, something like that. So there's a lag on supply, and I'm just curious, what are your initial thoughts on where we are in the market, and do you see any sort of pullback on the horizon?
We really don't. And from our perspective, the market is so large, and the part of the market that we play in is such a small fraction that the opportunity on our side doesn't seem limited in any way. Even if there is a pullback on fix and flip opportunities, for example, like I said, it's such a large marketplace and we're serving such a specific part of it. There's always going to be a need for quick financing and alternatives to traditional lenders, and we're there to fill that need. So even if market circumstances should change, and even on the equity side, like I said, we have value add opportunities where it's not necessarily we're just worried about what the overall market is doing, but we're really worried about how that specific property is going to perform. So that will continue to be a part of our due diligence as we list properties, and we haven't seen any kind of slowdown, and I don't see that anytime soon.
Sure. All right, Amy, if people want to learn more about what you guys are doing and how to get involved, where would they go and what would they find?
You would visit www.realtyshares.com. From there, you will find our current investment opportunities, the ability to raise capital. It's just a couple clicks to sign up, and we have a wide universe of information there about real estate investing as well. So there's a lot of information, a lot of educational pieces, and it's a great way to learn more about how we work and the process itself.
All right, Amy. Well, hey, I appreciate your time. I appreciate you sharing your expertise with us today. Wow, I'm going to definitely check it out for myself and see where the opportunity is for me, and I hope the audience does as well. Thanks for coming on the line with me.